Imagine waking up one morning and realizing America's biggest bank just collapsed overnight. People panicked. Markets crashed. Jobs disappeared. This wasn't a movie. This was September 15, 2008. The day Lehman Brothers died and America broke. Lehman Brothers wasn't a small company. It was a Wall Street giant, older than America's Civil War. For over 150 years, Lehman controlled money, deals, and power. And in 2008, it was worth billions. In the early 2000s, America was living a dream. Homes were getting sold like iPhones. Everyone believed house prices would rise forever. Banks were throwing loans at people, even if they couldn't afford them. These were called subprime mortgages, meaning loans given to people with weak income, weak credit, and high risk. Normally, banks avoid this. But in 2008, banks didn't care. Because they found a way to sell the risk to someone else. Here's the trick. Banks bundled thousands of risky loans together and turned them into something called mortgage-backed securities. Then they sold those packages to investors worldwide. And rating agencies labeled them safe, even when they were poison. Lehman Brothers didn't just participate. They went all in. They borrowed massive money to buy more mortgage securities. It was like gambling with borrowed chips and believing you can never lose. Then the impossible happened. House prices stopped rising. People started defaulting. Families couldn't pay mortgages. And suddenly, those safe investments became worthless. Lehman's balance sheet was filled with toxic assets. Investors lost trust. Banks refused to lend them money. And within days, Lehman started bleeding billions. On September 15, 2008, Lehman Brothers filed for bankruptcy. It was the largest bankruptcy in U.S. history. Over $600 billion. Gone. And then, the dominoes fell. Stock markets crashed. Banks stopped trusting each other. Companies froze hiring. And America entered a financial nightmare. This wasn't just Wall Street. Millions lost jobs. Millions lost homes. Families lost savings. And suddenly, even middle-class Americans were scared to buy groceries. The U.S. government had one fear. If banks collapse, the whole economy dies. So they launched massive bailouts. Trillions of dollars were pumped into the system to stop America from collapsing. Here's the shocking part. Other banks were saved. But Lehman wasn't. Some say the government wanted to teach Wall Street a lesson. But that decision made the crisis 10 times worse. The 2008 crisis proved one brutal truth. When greed becomes normal, collapse becomes inevitable. Banks didn't fall because of bad luck. They fell because risk was sold as safety. And the cost was paid by normal people. And here's the scary question. Could this happen again? Because today, America is drowning in debt again. If you want the next story about how student loans became a $1 trillion trap, subscribe now. Because history doesn't repeat. It upgrades.